recent announcement of national monetization pipeline by the government of India has raised a lot of debate. Before we discuss getting to the debate, there is a need to understand what is the monetization plan. The government announced roughly assets from which it can raise up to 6 lakh crores, which is equivalent to roughly $82 billion. These funds are already invested in assets which are there, like highways, like power transmission lines, oil pipelines, etc. And this will be monetized. The assets include 27% of highways, the pipeline, 27% of the pipeline is highways, and railways is 25%, so this makes 52%. Power transmission infrastructure, that means power transmission lines and towers, these are the power transmission infrastructure, this is 8%. Natural gas pipeline is 4%. Oil products pipeline, the petrol and diesel that we buy across the country from fuel pumps, is transferred through a network of oil pipelines. So these pipelines, they will contribute roughly 4%. Telecom infrastructure, this includes the huge tower network built by BSNL and MTNL, and also BharatNet. BharatNet is a project to take high-speed mobile, high-speed data up to Gram Panchayat level. So through optic fiber networks. So the network is being laid, part of it is already implemented in northeast in states like say Tripura, mostly connected. The network is there, now it will be monetized. Then there is warehousing, that is 5%. Generally, a lot of attention is drawn to real estate. Real estate is very small part of the national monetization pipeline. Only 2% urban real estate. The second question is, why monetization? Not too difficult to understand. We need infrastructure for industrial growth. India is not a trade surplus economy, which means that it imports more than it exports. So there is a deficit. So the government doesn't have access to funds of its own. Since at the same time, it cannot just keep investing, because then we have a deficit fiscal situation. So the fiscal situation of the country will run into trouble. And government is very keen to improve the infrastructure. In the past, some 30 years ago or 20 years ago, we used to have some 2-lane highways across the country. There was not adequate highways. The road traffic, the road situation was not so good. Traffic snarls, in the highways. The cargo used to stand for hours or days. Now that situation has more or less been resolved. Now what we know is even better highways, even faster expressways. Why do we need that? To increase the speed of cargo, to give the, suppose a manufacturing unit is located somewhere in UP. How can it transfer its goods or raw material from or to the port quickly? Apparently it might cost a bit more than in the past, but the movement will be faster, so the capital block will be less, and he can meet the export obligation or import needs much faster. And so that is efficient economy. So the government wants to create infrastructure redundancy. In the past, we followed a need-based model. We do as much as we need. But now we are moving forward to a situation like 24 into 7, when you 7 power supply. When you try to give 24 into 7 power supply, that means if there is a snag in one particular line, transmission line, there is capacity available through other lines to reach power to you. So the capacity utilization may be lesser, but the options will be wider. Now, for last 7 years, there has been an infrastructure rush. I'm just giving a few nuggets how costly this infrastructure can be. Some $16 billion, $12 billion highways and $5 billion railways. So $17 billion worth of investment is undergoing already in Northeast India. Another $16 billion worth of highways is to be awarded. They are under different stages of planning. Quite tens of billions of dollars have been pumped into neighboring economies, in improving the connectivity to and through neighboring economies to give Northeast India wider access to the marketplace. Similarly, let's go to the rest of the country. We are coming up with 2 lines of dedicated freight corridors, rail freight corridors. These 2 together will cost us roughly $13 billion, and we will need another 2 or 3 more. So one can immediately count how much money we need. Uttar Pradesh alone is witnessing implementation of roughly $10 billion worth of highways, and such highways are required in every state in the hinterlands. Otherwise, manufacturing activity or economic activity will largely be centered in the coastal states, as is the situation today. We have roughly 5 or 6 producing states like Tamil Nadu, Maharashtra. Now these all are closer to the port. So the hinterland is being neglected. The economic development of hinterland is being ignored. We need to bring them at par. We need to widen the market space. Even forget about manufacturing something. Suppose there is a factory somewhere in Tamil Nadu and it wants to reach its goods to Bihar. The logistics cost is higher. So that is a deterrent for the customer to get its good at cheaper cost. Now an industrial customer, when he doesn't get goods at cheaper cost, then it cannot be competitive. So the basic assumption, basic reasoning behind this, why the fund is required, is clear. Now the next question is whether this is a first time attempt. No. This has been in the circle for last 20 years. Many plans are being drawn, and most failed. It was called Private-Public Partnership, PPP. A decade ago, the previous government, when they were building, the Manmohan Singh government devised a project, mechanism called BOOT, Build, Own, Operate and Transfer. So where private investors were invited to come and invest in highways, power transmission lines, bridges, etc., and own those assets for 25 to 30 years, recover their returns through toll charges and other charges and transmission charges, etc., and then when they get the return, they transfer the assets to the government. This plan has failed. As in 2014, when the new government came in, there was a huge stockpile of stalled highway projects. Those who invested, they blocked finances in unbankable projects because banks don't invest in infrastructure. And many of them went bankrupt. So the net result was project implementation came to a standstill. Now this government, to solve this problem, this government tried options. What clicked is self-financing option. I am saying on an average and trying to give a more generalized view. So the government is actually buying the land and asking, employing a contractor to build the road. That is why the implementation has been very fast. The last 7 years, the implementation of highways has been exceptionally fast. And similarly in other infrastructure projects. And that is where we are stuck now. We cannot just go on this self-financial model simply because money doesn't grow in trees. So money has to come back to me. Now, the developed assets, it has a wider prospect of getting investors since it is already developed. Now an investor, the boot project, the failure of the boot project has taught us that the investor is not interested to own a piece of land or a piece of road or a piece of highway or a piece of transmission line. He is not interested. He is interested in seeing that his money is fetching more return. Globally, pension funds invest in infrastructure projects because they are long gestation, low return, low risk. To do that, we need vehicles. Any investor, the first priority is he doesn't want to get stuck. When he needs money, he will dilute his investment, he will sell his investment and he will get out. So the government a couple of years ago in 2016 first amended Sevi regulation. It's called Sevi. Sevi, we know the market regulator. So the piece of legislation was Sevi Amendment Regulation 2016. This allowed trade of InvITs. Those who read financial newspaper have come across. InvITs is nothing but investment trusts. Recently, probably in February, Power Grid Corporation went to the market with one such InvIT and it was IPO and it was quite successful. So what is an InvIT? InvIT is simply like a mutual fund. It is basically the initial corpus comes from the high net worth individuals, pension funds, etc. And when it is traded in the market, even you and me, the common people who invest in the retail market, they can participate in the trade. It is why it is good for the big investors, because they can get out of it. Suppose they can dilute 5% of their stake, 10% of their stake and go back. So this is why it gives them the exit clause, and that brings in the acceptability of the product, and it has gained some success. So the government wants to build on that. And if we look at the NMP portfolio, clearly we will see, if we just add highways, if we add the oil pipelines, gas pipelines, power transmission lines, etc., we will see roughly 50% of the NMP pipeline will be realized through InvITs. That is, how we can expect it. The whole guidelines will come out later, but it is more or less pretty clear. And these investment trusts, what will they do? They will invest, they will take a portion of the profit from the toll charges and etc. This is just as operating. They are simply taking a share and will sit there for 10-15 years. And in the process, government will unlock the huge money that it had already invested in building the highways and etc. It is win-win because government is getting its money back and the investor, one must remember that government is not here selling or making a profit. Government is barely bringing its money back, the money that it had invested already in building infrastructure. Infrastructure globally doesn't attract private investment because it is very long gestation. So this is an option created through which private sector can participate and we get access to more funds. And these assets are there, an oil pipeline. We already have, many do not know, we already have power transmission lines operated by the private sector. So there is nothing new that is coming in. Only it is a more structured attempt. Only it is a market tradable creation of better vehicles. That's it. So that is about almost half of the things. Then there are a couple of things which like say railways, for example, the majority, a good part, a substantial part of the investment the funds that will be raised through monetization of rail assets is development of 400 rail stations. Now we all know railways has land in prime locality, rail stations, these are very well located, connected. Now as of now, it is merely used by the passengers. So the government doesn't earn any money. Rail company doesn't earn any money, and rail company cannot earn any money from the passenger even tomorrow. What it can do is, station can operate as it is on the station, above, vertically. So there may come up the new hotel, there may come up a shopping plaza, and railways will get its money through this monetization, and the private sector will also make business. Similarly, 15 rail stadiums. Now these are located in the hinterlands. How many times in a year they are used? Not many, but tomorrow if these stadiums are developed, marketed, we might see, say, ISL matches or IPL matches in these stadiums, or some other, this kind of sports coming up, and this is good for development of sports as well. Now the final part. So, are there any questions about it? Yes, there in a democracy there should and can always be debates. Debates is a part and parcel of democracy. So debates should be there. Now, what can be on which should we debate? Should we debate that whether NMP should happen? Yes, it must happen, because the economy depends on circulation of money. If the money goes through a pipeline, through a blind alley and gets stuck, then the economy will not grow, it will sink. So the money must circulate. So from that perspective, monetization is very important, it must happen. There are a few questions. What are those questions? One, it is coming in a huge rush, the 6 lakh crore that they will be raising from the market. Now, the normal demand and supply rule of the market tells you that when there is a demand for something, so the price goes up. In this case, what is happening is that there is a rush to find investors. So, if there was, if you bring out 30 projects at one go, and suppose there is a market in which there are 100 investors and you are bringing out 30 projects at one go, so these 100 will participate. Now, if you are bringing out, say, 10 projects, then these 100 will participate and they have more disposable fund for the 10 projects. Simple, the division of funds. So, apparently the fund realization part of it, fundraising part of it, may be affected because of the huge rush to do that. This is coming in 4 years as per NMP. Also, the huge rush has invited the debate or criticism, whichever manner it is. But a bit slower, if it was a little more dispersed and over the time, then it could have been, less debatable probably. For example, InvITs are already there and they are raising funds and no one really bothered. But the moment you said 6 lakh crores, so everyone jumped up. Now, this is second thing is, when we are developing these assets, say the stadiums or the stations, we need a regulatory framework. Right at this moment, Indian Railway is the father and mother of all rail business. So there is no regulator. We need a regulator. His job will be to protect the interest of railways and the interest of investors. This is very, very important. Ultimately, whether it is government or whether it is you and me, when we are putting our money, we must look at the safety of the investment. So, someone will not invest unless and until you give him that level playing field. If you just try to take away everything, so he will not come. Now, this has happened recently. One of the NMP proposals is for fundraising through railways is through operation of private trains in excess of whatever trains are currently running. We saw recently a tender for inviting private participation to run 151 trains has more or less failed, excepting in 2 circles, and only 2 bidders it attracted. The reason is that the tender was very one-sided. It was all in favor of railways. So the question is, for the success of the whole initiative, we need a bit, we should have the right framework. Hopefully the government will look into these affairs and will ensure the success of the NMP. Finally, NMP should happen for the good of Indian economy, and it's one of the biggest reforms that could have taken place in last 20 years. Thank you so much.